All right, so bot trading, it's not as complicated as you may think. I've got the Bitcoin chart up here for everybody to see. What I'll do is pull up the Bitstamp chart because I don't ever keep anything on the Bitstamp chart, and there's good data there. And let's pull the indicators off because we don't need any to talk about bot trading. We're just explaining how it works here. All right. So what is bot trading? Fairly simple for understanding's sake is, we get on an exchange and we make trades. We buy a coin and we hold on to it and we ride the waves and we make money. Okay, well, we use our emotions sometimes to make moves. We look at a chart and say, oh, that's down. I think I'll buy that. Like you see here, the Bitcoin chart made a move down right here. And we bought it, right? Okay, so you bought that down move and you thought you made something. Well, essentially the bot sees the same thing you see, okay? And there's bots on both sides. And I say bots, and that's just basically software actuated trades, okay? 95% of stock market trades, I'm not sure the percentage on Forex because I can't really find any hard data. But 94% of all cryptocurrency trades are software driven. They're not even us doing it, okay? It's just simply a computer playing with another computer, buying back and forth, okay, using the exchange as a moderator. So, essentially, if I take this bottle cap, I'm a bot and I'm buying one coin. I buy down here at the bottom from the exchange and accept it. When it gets up here to this point, I sell it to the exchange. What does the exchange do? The exchange sells it to this bot. This bot is waiting for it to go down on leverage. There's multiple different kinds of way to trade, but it doesn't matter. This bot waits for it to go down on leverage. What happens then? The chart starts to go down. The chart goes down. The bot sells it back to the exchange. This bot buys it back at the bottom. Pretty simple, right? Okay, it keeps going on and on like this 100 times per second, okay? And I say 100 times per second because I don't really have solid data on how often that happens. But I can tell you that Wall Street trades at about 1.4 million trades per minute. Okay, per minute. 1.4 million trades per minute. So please use your thought process on this and tell me, do you really think there's 1.4 million people staring at a computer screen and trading at the exact same moment? And I'm going to answer you that with a big fat no. It's not how it works. It's a software, okay? It's lots of computers with really sophisticated, really smart programs that are using this stuff to trade with. Now, how are they trading? With the exact same strategies we use, okay? The trading strategies are no different. You can use all different types. You could use the cloud for a conservative trading strategy. You could use the 8 EMA only for an aggressive trading strategy. You could use the MACD for a slow-moving monthly trading strategy. It's all different ones, right? It's quite simple, though. Now, that's on a daily. I'm just using daily right now, okay? So what we could do is, that's 4 hour, I'm sorry. We're just using the 4 hour, and I'm just going to switch around, okay? So one coin would have been the 4 hour, all right? On the daily, there's a whole nother set of bots or set of software moves. And how does that work? Well, instead of it just being the one coin moving back and forth between bots through the exchange over and over again, okay, they buy, they sell, they buy, they sell, and they take the percentages they can get. Usually that's about 2%, okay? But all different bots work on all different percentages. You just don't have the access to it because you don't have the money to invest in these things that other people do, okay? Hold on, let me answer some questions. All right, so there's no questions. So do I include spot orders in those numbers like buys? Absolutely, absolutely. All different sheets, all different matters are software driven. So we have our 4 hour going back and forth. We also have the daily trades going back and forth, okay? So as you see, this one coin is small. This one amount of trades is small, but the daily is much bigger. And it trades also back and forth through the exchange. What does that mean? Well, that quite simply means that this trade is a lot smaller than this trade. So which one should you be looking at? Well, you can look at both, but you need to understand that this one has more momentum than this one. So this is why you can't get caught looking at the lower time frames, because you get lost in the small amounts, but you forget that the big time frame is moving back and forth also. Now, does it stop at daily? Absolutely not. It doesn't stop at daily. We go to weekly. Even bigger moves. Okay? That's a huge move compared to these little tiny arrows we made right here. If we put an arrow here, we'll see that is a much larger move. What does that mean? Well, now we got this big cup right here, this small little coin, plus the pretty nice sized daily coin, back and forth. And it's also important to know that this little small coin and this daily coin gets destroyed by this big cup, okay? Cup lid, 12 ounces, 32 ounces, okay? And they move back and forth. And when one of these big cups comes in, these back out of the way and shut up while this one happens. That's just the way trading works. If you don't understand why I'm saying that, it's important to know that the bigger moves on the bigger time frames kind of swallow up the little ones. Okay, now the little ones are still happening back in there, but basically the software sees a big move happening and backs out. It backs out, stops and takes its percentage and moves away. And the bigger percentage, the bigger time frames, comes in and rides up. Now, how do we know that? Well, an example of that is OMG. And OMG showed us that fairly obviously. We were all looking at OMG and going, why is this happening? Why is this chart moving like this? It's just taking off and it's blowing through everything. Well, it kind of wasn't, okay? And we know it kind of wasn't because we were able to put monthly charts up here and show you what was happening. Okay, I'll put it up here for you for an example. We'll kind of size it up correctly here. We found out that the monthly moves from June, now it's up to you to research this stuff, okay? We can't be your researchee. But anyway, we'll pull this one here for an example. June 19 area, down, and then reversed. And as you see, these monthly moves correlate perfectly with the things we look for. A 786 hit right here. A drop. Went sideways a little bit, caught support, and came up. What did it do? It hit one of our profit lines. This is why we take profit on the way up, because if we waited for this 1618, we'd have never got our profit, okay? We'd have been stuck. We'd have been stuck here waiting, and it never happened. This is why we hit our take profit lines, as here and here. We would have got 70% of this trade out. We'd have got out and been waiting to see what happens. Okay, now it's dropped a considerable percent. And that percent, look, I mean, it's dropped 60% of its value. If you were waiting, you'd have lost 60% of your profit just sitting there waiting. This is why it's smart to understand that these things happen. If you were looking at the daily and you thought, I'll just use the daily chart and that'll get me what I need, well, that'd have been a huge mistake. While most trading happens on the daily, I will admit, most trades happen on the daily. Not all of them do. A lot of moves happen on the weekly, the monthly, and also the quarterly. And we just started a new quarter, which is kind of why I wanted to get on here and talk about this. So we see these quarterly charts pop up. I want you to know that things are going to happen, and you better be prepared for them. I'll pull this one off since we already used it. But if we're just looking at the daily, this thing blew right through any daily moves that it could have made, okay? You see it, we hit our 1272 here almost perfectly. We would have drawn a box right here and hit our box and would have took profit. Let's get rid of this fib set then. We wouldn't have got all of our profit and we'd have been irritated that we didn't get it all. But if we waited a couple more days, this thing blew right through what we were looking for. Look at that. It went right to 1618, which is pretty cool. But it made this god-awful move at the top, didn't it? See, hit 1618 right there on the daily. Very nice. But it made this move. Well, what the heck was that? If you're looking at the daily, this doesn't line up with anything, does it? That's just some crazy move. That's why you go out to the monthly and the weekly. Weekly starts to make more sense. And there you kind of see that if we look at the weekly, we came down, hit a mark, ride it, came down, hit a mark. We use this June 19 area over here on the monthly to see that we made a monthly move. Now, do we have 3 months worth of data on this? I'm not sure we have 3 months of data on OMG. But I'd like to see a quarterly, and a quarterly would be 3 months, 3 months, 3 months, 3 months, 3 months, 4 quarters in a year. We don't even have 3 month charts on CoinTrader, so I don't think I can give you a 3 month quarterly chart on OMG. Yeah, I'd have no data here. That's not enough. We can kind of see that, right? We can kind of see that there's a quarterly correlation here, and the quarterly chart is very technical. Yeah, see, we still hit the 1414 on the quarterly, and we're going to come down to maybe 325 on OMG. If by the quarterly charts aren't exactly detailed, they're just a big move, okay? And I want you to understand that's like 4 of these cups moving back and forth, rather than the one coin trade that we see here. Now, how do we know these are bot trades? Well, it's a little bit complicated and a little bit easy to understand at the same time. All right, so we've actually monitored the trades before during a normal day of trading. Just sat back and watched and monitored the trades when we were trying to find coins that we thought may or may not go somewhere. And what we found was some of these coins were trading one coin at a time. So if it was VET, one VET token at a time. VET is trading at 1 cent. So you mean to tell me that some human traded one VET token to the exchange? Just one. Now, he paid more in fees to trade that one coin than he did to get rid of it. He would have lost money trading one VET. That's stupid. No human would do that. Now, well, who did it then? Quite simply, it's a trading bot reducing its position and taking profits. Now, if you're already in the profit, you wouldn't mind removing just one VET, right? One VET every 10 seconds. Every 10 seconds, we're getting rid of one. We could watch it on the sheet happen. We watched it with XRP. Who trades one XRP? Nobody. Who would just trade 1/4's worth? That's dumb. You wouldn't do that. You would trade it all, or you would trade a lot of it. You would trade like a lot of 100 XRP, and then 100 XRP, and then 100. You wouldn't trade one. That's stupid. And furthermore, we know this from a documentary that was done on the stock market about a guy who invented, a trading bot strategy, and he actually ran it and was making a lot of money off of it until they shut him down. All right, and then he kind of explains that Apple stock in 2010 traded at 1 cent. Now let me show you something. I said Apple stock traded at 1 cent in 2010. Show me on the chart in 2010 where it traded for 1 cent. Because I'd love to see it. Right here is 2010. I don't see any 1 cent trades. Now what happened? Well, it's kind of complicated and kind of not. And I'll explain it to you here. Yeah, look at 2010. You see any 1 cent trades? I don't. Quite simply, in 2010, the market was a little bit more Wild West than it is now. Okay, this was after 2007 when we had the housing crash. This is after 2009 when they tried to fix it by pumping some stuff into it and trying to make it better. Obama was elected. He tried to make things different and change things. And this happened, okay? So in 2010, trading bots essentially started to sell Apple. And they sold Apple, and they sold Apple, and they sold Apple. And they sold so much that they followed the trend down, and they were selling at 0.01 cent per share. Now, if you know Apple, they had no bad business at all at that time. In fact, iPhones were booming. Air Max were coming out, all kind of cool stuff. They're killing it. Why would their stock be going down that far? And there really is no answer for that because there was nothing to cause that to happen. They had good earnings reports, all this, okay? This is why I say the news doesn't matter. You don't matter like you think you matter as far as the money goes. No human would trade Apple at 1 cent. If Apple was 1 cent today, I would unload my bank account to buy Apple at 1 cent. I'd unload every dollar I've got and buy Apple at 1 cent. But that's not going to happen. In 2010, it happened. The market drove Apple down to 1 cent. But you can't see it on the chart. Why is that? Because the NASDAQ and the Dow and a couple other people who do exchanges erased that data from ever happening because they realized it was illegible and not true. But it really happened. So quite simply, they erased all the trades. They took them all away. Just like the oil trades that happened earlier this year when I think the Saudis, maybe it was the Saudis or maybe it was Kuwait, I don't remember, but they dumped oil on the market and they flooded the market and supply and demand kicked in and there was no demand. So the oil price went into the negative. They were paying you to take it instead of you paying them. So all those trades for that oil stuff got taken away also. All right, they actually stopped that. And when it came back up, they turned it back on. Now, this happened in 2010. And when this happened, the NASDAQ, the Dow, and Wall Street all got together and put in circuit breakers. And these circuit breakers cut and stop the market at 15% drops. If it drops 15%, the idea behind this is this stops the bots and it gives the people who run the bots a time to find more liquidity, to find more money, to figure out whether they want to buy or sell from this stopping point, okay? And then they turn it back on. And if it goes down another 15%, they stop it again. And they turn it on, and they stop it again until it stops, okay? And then what happens? Well, the crash from this year, which actually wasn't a crash, it was a retracement, happens again. See, we had this drop, pick up, drop, pick up, drop, and then we started coming back, okay? As you see, there's some gaps in the charts. I'm all down for hearing the gap theory on the Dow. That's fine, whatever, Apple, doesn't matter. The point is, this was a monthly retracement. You just didn't see the monthly because you weren't looking for it. What you were looking for wasn't there. Now look, from May 18, look how accurate that is. Oh God, the stock market crashed because of Corona. Look. This was right when this happened. This was a monthly retracement. We had a clean reversal up to 1618. Took profits. Why did we take profits? Because we hit our target. The entire bot trading system took its profits. Do you understand? Why wouldn't you take your profits at 1618? They took the profits. What happened when you took your profits? Retracement happened. It's not that complicated. It's not that complicated. It's pretty simple, actually. Was this a Corona crash? No. I'm sorry to say that, but the news happens after the chart. Okay? Not the other way around. We can try to put stuff with the chart and say, oh, this is why it happened. News happens after the chart. Okay? It's just the way it is. What have we done from here? Well, we reversed. Reversed back up again. Where did we reverse to? Look, we went too far. The TA didn't line up on the month, did it? We went all the way up here to the 2 line. But look where we're coming back to. The spot where it should have went to begin with, the 1618 line. This happens over and over and over and over again. When the market goes too far past its target, it pulls back. It's simple, okay? It's simple. Now, is this something that I'm making up? No. You can go back in history and do this all you want. We're just continuing an uptrend, in my opinion. We haven't done anything good or bad. We're just continuing a trend. This is going to continue to drop until we come down to a good drop level. What's a good drop level? Well, let's see. Let's do this one. This was the bottom. And we came up to here. And look, we did a 50% retrace. And then we started back up. Well, let's find 50% again. Where do I think Apple's going to go? 85.65. That's a long way, isn't it? Maybe it doesn't go that far, but it probably could. 85.65. If it really, really wanted to on the monthly, it would. Now, maybe it doesn't go that far. Maybe it just goes to 95.91 or something like that. But these are going to be my target lines. 95.91, 85.65. I'm liking these 2 targets right here. It's the way the stuff works. It's not that complicated, okay? We want to make it out to be stuff, and we want to say stuff, and it's just not there. I hate to break it to you, but that's not the way it works. Let me read some questions real quick, because this is all interactive. Let's see. I have done it to fuck with I fell for that hope and change once. Yeah, it turns out it was just the same, a whole bunch of the same. The Big Short movie explains all this. Yes, I tell everyone in the group that required watching is The Big Short, Too Big to Fail, and The Giant Beast That Is the Global Economy. Those three things are kind of required watching to understand how this stuff works, okay? All right, just because I got some new, literally just before the feed, I can check out the chart for MKR. But yeah, let's see. Was it the 618 or a sunspot? Yeah, I'm not going to hear sunspot talk. March pre-April crash talking, and all companies buyback equals like S&P 500 and quarter one. Absolutely. It's cyclical what he's saying here. It's cyclical what he's saying that they sell in quarter four, they buy in quarter one. Absolutely. Why would they do that? Because that's time in the market to buy and sell. Reports start coming back to the end of the year. These reports come back and they drop. These companies buy their own stock back. Now, I want to explain that in another video. So let's end this one off here, and then I'll start back in another video.